Today is Monday, May the 22nd, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMI's Senior Ag Analyst, and Alan Bush, ADMI's Senior Financial Economist. Starting with the financial markets this morning, Alan, the stock index futures have been trading rather sideways for the past several weeks with a few volatile peaks and valleys. What is the current consensus view on the stock indexes?
Well, despite the S&P and the NASDAQ futures after being in a wide range, actually making some new highs for the year last week, but the consensus view still appears to be unbalanced, bearish. A lot of the commentary and a lot of what I'm reading is disbelieving and not really thinking that there will be some follow-through strength, especially with all of the bearish news as of late, not to mention just the debt ceiling situation and the hawkish Fed. But yet stock index futures performing very well in an atmosphere of, I would have to say, mostly bearish news. So that would suggest that the indices will probably continue to advance, at least in the near term.
And from time to time, we look at the industrial commodities. What is your price outlook for the industrial commodities right now?
So right now, I'm thinking that the industrial commodity prices will probably continue to weaken. And that would be across the board. Copper just last week hit a 6-month low. Earlier this month, crude oil fell to its lowest level since January of 2022. Natural gas is near its 2020 lows. So keep in mind that the yield curve is still very much inverted, and that is a very clear indicator and a very reliable indicator that there could be some economic weakness ahead. So the technicals appear to be bearish for the industrial commodities and the fundamentals as well. So I'm looking for lower across the board in the industrial commodities.
Last thing, Alan, what reports should traders be looking out for this week?
Okay, well, Tuesday we'll have the May Manufacturing Purchasing Managers Index guessed at 50. Also on Tuesday, April new home sales guessed at 670,000. Wednesday, the FOMC minutes from the May 3rd meeting. That could give some clues as to what the Fed might be thinking at the upcoming June 14th meeting. Thursday, first quarter GDP anticipated to be up only 1.1%. And personal consumption expenditures anticipated to be up 3.7%. And then Friday, April durable goods guessed at down 1.1%. And the May consumer sentiment index anticipated to be 58.
Thank you, Mark. Let's talk about the grain markets, specifically weather. What are the biggest concerns right now, weather-wise?
Well, here in the U.S., weather has generally been favorable in the past week. A big reason for last week's plunge in price. Heaviest rains last week were across the southern half of the Midwest, including the southwestern plains. Drier across areas of the north, which was beneficial for field work where plantings to date had been running slow. Rains in the south were also beneficial in reducing the drought areas in the winter wheat areas. Likely too little too late to help this year's crop. However, longer-term beneficial for corn and soybean development. Whether this week will be dry across much of the central and eastern thirds of the Midwest, that should enable plantings to near completion by the end of May. However, as temperatures warm, it will be crucial that rains do develop by early June in order to promote early growth, and some of these areas might be becoming a little bit too dry. Also, some chances for some needed rains across the Canadian prairies this week, an area that has been dry as of late. Rains could be spotty, however, so coverage and overall totals will be crucial for spring wheat and their canola crops. Also, good rains in southern Brazil this week, which should benefit the late maturing second corn crop. And also, Russia is also another area to keep an eye on, as been trending drier there in some of their wheat growing regions.
Mark, there's a crop progress report in a few hours this afternoon. What are your expectations for today's report?
I think corn plantings likely reached mid-80 percentile as of yesterday, somewhere maybe in the 82 to 86% range. That'd be up from last week, 65%, and well above the 5-year average of 75%. Crop emergence is likely to be over 50%. So I think it's 50-50 whether we get our first crop condition report today. Soybean plantings are likely nearing the 2/3 complete. I look for 64 to 68%. That's up from 49% planted last week, and the 5-year average of 52%. Spring wheat plantings probably had a pretty good week last week. We expect plantings there to have reached the 60%. That'd be up from 40% last week. However, still behind the historical average. I also look for another modest bump up in winter crop ratings as well.
And Mark, finally, what about providing our viewers with your near-term price outlooks for both corn and soybeans?
Well, we're seeing a nice rebound today from the deeply oversold condition. We saw an announced soybean meal sale to the Philippines, which is providing a boost. Last week, July corn traded down to a level, it was $1 off the April high. So that's the third year in a row now we have seen corn prices drop that much in the spring months. But I'm really thinking this bounce back up is going to be somewhat limited. South American corn and soybean prices to continue to undercut the U.S. in the global marketplace. So I think July is going to stop short of that $6 level. Same with these corn on a rebound up to $5.25. And I think lower lows are likely, barring a U.S. weather problem. Soybeans, similar situation. Nice bump up there today. Last week, July came within a couple cents of last summer's low before today's rebound, but I look for a rebound to be limited to the 1350 level in the July and 1350, 1365. No beans, about the 1225 level before I think we'd run into some pretty good resistance.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests. It should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.